Okay, good afternoon. My name is Dominic Curcio. I'm the Vice President of Business Development for Agatha Global Tech, the founder of Annuities Genius, and thank you so much for joining me today. We're going to be welcoming in Jeff Barnes from Equitrust today, and I'm very excited to have Jeff back for another session of his webinar. He's going to be talking about their product, a little bit about the carrier, and a little bit about how they can help you grow your business. So without further ado, we're going to have Jeff Barnes here from Equitrust. Thank you so much, Jeff, for joining us.
Thank you, Dominic. It's great to be on another webinar with Annuity Genius. Congratulations. I know you guys have hit your 2-year mark, and it's just, it's phenomenal, the growth that you guys have had. So nice job over there. I am going to go ahead and get started. I want to just touch on basically what has been working for us over here at Equitrust. And back in 2019, if you recall, we made some pretty big changes to our annuity portfolio, specifically our fixed indexed annuity portfolio. We went from 10 products to 4. So you can see the 4 fixed indexed annuities that we offer today. But you know, we did that in an effort to keep things simple. And we didn't just get rid of 6 products. We took the best of what we had. We made some great enhancements, picked up a lot of state approvals, and landed with these 4 products. So the 2 on the left are the bonus FIAs that we offer. Our Market Power is a 10% upfront premium bonus, no vesting schedule. It is available in 47 states with a 10% bonus. As just some states, it's a 10-year. And then below that, you'll see the Market 10. That's a 6% bonus product that we offer, the 6% bonus for the first 5 years that the client adds premium to their annuity. It does have a built-in return of premium, which is also a very client-friendly feature. And then the 2 on the right, the Market Value and Market 7, which I'm going to focus on the Market Value today. But those are our accumulation products, accumulation workhorse fixed indexed annuities. Now, one thing I want to point out before I talk about the Market Value in detail, when you look at these 4 products, I think it's kind of neat that you'll see that we've had these for quite some time. So 3 out of the 4 have been around since 2004. And the Market 10, as you can see, has been around since 2007. I bring that up because I think it's important. These aren't new flashy products that we just rolled out. They've been around a long time. And Equitrust is one of the few carriers where we will publish all of our renewal rates out on our website going back to when the product was introduced. So you've got longevity and you've got transparency. And I think that's very important when we're talking about renewal rates. As my actuaries always tell me, you know, when it comes to renewal rates, we raise them when we can, we lower them when we have to, but we don't subsidize our rates. We don't do this come on rate up front for the sale, knowing that we're going to take it out on the back end with renewal rates. So longevity and transparency there for sure. But the 2 that we've been selling a lot of here are the Market Value and the Market 7. Very similar products. The Market 7 is a 7-year chassis, where the Market Value is a 10-year. The only other difference, the Market 7 does have a unique rider. It's a guarantee rider. So at the end of the 7 years, even if there's no indexing crediting, the client's guaranteed to be at 107% at the end of 7 years as a minimum guarantee. So kind of a nice little feature on the Market 7. But otherwise, the 2 products are very similar. So the Market Value, again, this is our #1 selling fixed indexed annuity. It is our accumulation workhorse. It is flexible. It's built for rates and caps. So there's no bonus. We put everything that we can into accumulation for this product. 10-year chassis. It's approved in every state we do business in, except for New York. And we can write it up to and including age 80. So I want to show you where we sit with the rates. These are very competitive in today's environment, and we wanted to make sure that we offered a lot in the way of different crediting options. That's why you see so many on here. The goal with this product is accumulation. So we wanted to make sure that we had plenty to choose from, not only at the time of sale, but also when it comes time for renewals. I think it's good to have some variety and some choice there. So as you can see, the fixed account, we're sitting at 2.5%. Not bad in today's in today's rate environment. We've got the 1 year point-to-point cap at 4.5, and the 1 year point-to-point par is sitting at 30. So those are on just the regular S&P 500. We've got a couple of averaging options as well, again on the S&P 500. So there's a monthly average cap of 5, and then a monthly average participation rate of 55. We do also have a monthly cap or a monthly sum. You know, some people call it a monthly sum. Again, on the S&P 500 at 1.85. And then we have a 2-year monthly average cap, again on the regular S&P 500, and that's at 12. And then to round them off, these are the vol-controlled indices that we offer. So Barclays has created the Focus 50 for us. It's a volatility controlled index, very simple. It's just 50 low vol US stocks and treasuries, and sometimes cash. So there's a 1 year at 90% point-to-point par. And then the Barclays also has a 2 year, which is 120% participation. And then the last one, we've got the Mark 5. That's the S&P Mark 5 ER. And the 1 year point-to-point participation rate on that currently is 100%. So when we illustrate fixed indexed annuities, we have to follow the NAIC guidelines. And basically, we show the best 10-year, the worst 10-year, and the most recent 10-year. So I did want to have a slide that showed where those are currently illustrating at today. So when you split those out, if you look at the S&P 500 options, you can kind of see where those fall in that. Well, low point is at like 1.54, high point is 4.17. So again, just following the NAIC guidelines with regard to illustrating FIAs. And then here's where the illustrated rates are coming in on the vol controlled. So you can see they are a little higher on that Barclays Focus 50, and then the S&P Mark 5 ER. So I think this is kind of an interesting slide. The next two slides, what we're doing here is we're comparing the actual S&P 500 versus the S&P Mark 5, the ER. So that's one of the vol-controlled indices that's offered on the market value. And what we did here is we wanted to show raw returns versus credited returns. So we've gone back to 2011, and we've shown you in the green what the S&P 500 raw returns were each year, and then in the light green, that's the S&P Mark 5. So those are just going back to 2011, the raw returns on both indices. And then we overlay the participation rates. So currently on the S&P 500, again on the market value, that's a 30% point-to-point participation rate. On the S&P Mark 5, it's 100%. So we're going back, we're showing what the raw returns are, and then overlaying the actual participation rates to show how those look. we're not saying one index is better than another, but we do know with vol-controlled indices, typically you're going to have much higher crediting rates because cost of call options are lower. And so you're actually capturing more of that index growth compared to the S&P 500. And then we do the same thing with the Barclays, the Focus 50. So just kind of comparing for you the raw returns of the S&P 500 versus that Barclays Focus 50, and then overlay the participation rates. Again, 30% on the S&P 500 and 90% on the Barclays Focus 50. So again, you're able to capture more of that index growth with the higher participation rate because it is a vol-controlled index. And then finally, I want to kind of close out on, I think it's important to diversify. That's one of the beautiful things about a fixed indexed annuity is there's lots of choices. And as you can see on the market value, we want to make sure that we're giving clients lots of choices. But I think it's important to diversify and not just chase last year's winner. So we created this chart, or what we call a quilt, and we've gone back to 2010, and we've looked at what the actual S&P 500 did each year. Okay, that's just the raw return of the S&P 500 each year going back to 2010. And then we looked at each of the crediting options that are available on the market value based on the current rates that are offered today on the market value. And we've gone back and we've laid out which index performed the best, which one got first place, second place, third place, and so on. And I think it's kind of an interesting piece because I think this does tell the story for the importance of diversifying amongst different crediting options. As you can see, several of the crediting options got at least a first place ranking in some of these years. So 6 out of the 7 earned a top ranking at least 1 year. So that shows diversification. We do take out 2015 because that was a negative year for the S&P 500, and none of the crediting options would have returned any kind of growth. So we just kind of take that one off the table. And then also, this is kind of interesting. So there's 3 years where the S&P 500 was negative or 0, yet we still had crediting options that had some growth. Some of them were the vol-controlled indices, and then some of them were the monthly averaging. Sometimes that monthly averaging can prop up a negative year and actually give the client some kind of a return. So I think it's a neat marketing piece that we put together to really hit home the importance of diversifying among the different crediting options. Again, that's one of the beautiful things about these products is you're not stuck with just a few. You've got several to choose from. And of course, each year the client can always reallocate. And I'm going to go ahead and close it up there. Again, Dominic, I want to thank you so much again for having us on another webinar. Congratulations on all the success that you've been having over there at Annuity Genius. And I'm going to turn it back over to you. Thanks, Dominic.
Thanks, Jeff. I appreciate it. I'm just glad that you could take the time to actually join us, and we actually are just happy to have you. So basically, if you guys haven't taken a look at Annuities Genius just yet, take a visit to www.annuitiesgenius.com. We'd love to have you. We love you as a customer right now if you're currently a customer of Annuities Genius, and you guys have a great rest of your week. And thank you to Equitrust and Jeff Barnes. All right, have a nice day. Take care.